silver just exploded past $54. Globex halted trading up 2%. The gold-to-silver ratio just broke a 14-year support. And China is preparing physical silver export controls as stockpiles fall to 10-year lows. CME halted futures right at the breakout moment. Liquidity vanished, and analysts say the system is under maximum stress. This is the most dramatic moment the silver market has seen in years.
Rashad Hajiev's update. Spot silver above $54. Gold to silver ratio under 14-year support. This is a major observation. Spot pushing above $54 is already a psychological level, but the gold to silver ratio breaking a 14-year support means the structural trend between the metals may be changing. When long-term ratios break, it usually signals a shift in how the market values one metal relative to the other. It doesn't guarantee future direction, but it does show that something significant is happening in market behavior. Silver Degen's observation. Silver smashes $54 and CME is down for technical issues. This adds more fuel to the conversation. A sudden technical halt right as silver smashes into a breakout area naturally raises questions. Whether it's coincidence or timing, people are clearly reacting to the way the system behaved at a critical moment. Justario's breakdown. Just spoke to a commodity trader and he said the glitch excuse is BS. Silver futures book was very thin, then a trade cleared the offer side with no quotes left. According to him, CME is giving time to market makers to reposition and avoid a price print off the charts. This is a detailed insider-style explanation. He's describing a situation where liquidity dried up, the order book emptied, and a single aggressive trade cleared the market. In those moments, exchanges sometimes halt markets under the label of technical issues, but traders on the ground often believe the halt is meant to prevent extreme prints. This doesn't confirm anything, but it shows how stressed the futures side was. Macro Liquidity's comment. First, CME glitches when silver was about to break out. Later, gold prints a $40 liquidation wick twice and instantly recovers both times. That's not real selling. That's market plumbing under maximum stress. This comment ties the silver events to gold's strange price action. Two instant $40 liquidation wicks followed by fast recovery suggest algorithmic liquidity shocks rather than genuine market selling. Again, this doesn't prove manipulation, it simply shows the system was strained across multiple metals at once. Another update from Justario. Too bad the CME cannot shut down the spot silver market. This is a good reminder of the big difference between paper silver and physical silver. This speaks to the long-running debate, futures contracts versus physical bullion. When futures trading halts but the spot market keeps moving, it highlights how different these markets behave in real time. Futures can halt, physical doesn't. Peter Spina's observation. CME shuts down futures trading because of record silver prices threaten to melt down the data center. This is a dramatic way of describing the situation. Whether literal or not, the message is clear. The system hit levels of stress that people aren't used to seeing. The tone shows how unusual today's market action felt to longtime silver analysts. Third comment from Justario. CME claiming they're experiencing a technical glitch and halted trading. What a coincidence when silver was about to explode upward and at the news it came down sharply. This highlights a sentiment shared by many traders. The timing looked too perfect. Price was building momentum, liquidity was thin, and the halt happened at the exact second the market appeared ready to shoot higher. Again, this doesn't assign blame, it simply shows the narrative forming among market observers. Eric Yun's reporting. China is also starting physical silver export control on January 1st, 2026. This is potentially the biggest structural development of all. If China is restricting physical silver export starting in 2026, it could impact global supply flow. Export controls often signal strategic resource prioritization, and the timing, right as we're seeing global tightness, adds another layer to the story.
Garrett Goggins' update. Quote, and silver halted up 2% in Globex trading. Buckle up. This is a short but powerful statement. A 2% halt in Globex, especially during thin overnight liquidity, signals just how fast the futures market moved. Buckle up is the perfect summary of the energy in the market right now. Alistair McLeod's observation. Quote, by this stage of the day, COMEX always gives final open interest figures for gold and silver. Not today. They have made substantial revisions between prelims and finals recently. Or is it just a technical issue? Alistair is pointing out something important. COMEX usually publishes final open interest figures like clockwork. When that doesn't happen on a day of extreme volatility, people naturally wonder whether it's a delay, a technical problem, or something bigger behind the scenes. The recent pattern of large revisions only adds to the tension. Hansa Cherney's breakdown. China just revealed the real price of platinum, approximately $1,940 per ounce, about $300 above COMEX. This is the physical market versus paper in real time, and this is exactly how the revaluation of silver begins. The West is keeping prices artificially low, but Asia is not. The pressure on physical metal is only just beginning. Silver squeeze is imminent. This is a strong message from Hansa. He's pointing out a huge divergence, the physical price of platinum in China versus the paper price on COMEX, and he's using that to illustrate what he believes could eventually happen to silver. Physical demand forcing a repricing that paper markets struggle to control. It's a bold view and reflects the rising tension between East and West pricing models for precious metals. Gold telegraphs observation. China's silver stockpile is at 10 years lows. Many are sleeping on this data. The metal is already in a deficit. This adds another major fundamental piece. Low stockpiles combined with existing deficits create a very different backdrop compared to previous market cycles. When physical availability declines for years, price reactions tend to become more dramatic even without speculative participation. Another update from Garrett Goggin. Check out the silver futures volume on Thanksgiving night. We are talking about a breakout above all-time highs that has no top. This is a strong comment about futures volume. When historically thin holiday sessions suddenly produce all-time high breakout volume, it means heavy players were active when almost nobody else was. That kind of volume surge usually reflects institutional urgency, not retail enthusiasm. Altogether, these updates paint a very clear picture. Globex halts, missing COMEX open interest data, Eastern physical pricing far above Western paper pricing, China's stockpiles at decade lows, and futures volume exploding during a holiday session. The common thread? The entire precious metal system, paper and physical, is being pushed hard from multiple angles at the same time. None of this predicts the future, but it absolutely shows the pressure, the stress, and the global divergence that analysts have been watching closely. This is not calm market behavior. This is a market under strain. This video is for news, analysis, and educational purposes only. Nothing in this video is financial advice, investment advice, or a recommendation to buy or sell any asset. All posts quoted belong to their respective authors, and all commentary reflects general market discussion only. Always do your own research and consult a licensed financial professional before making any financial decisions.